This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, February 11th, 2016. Euro dollar. So it looks like the euro still has more room to run up towards the measured move objective at 114.10. Looking back several days back, the market had been consolidating in the 350-point range between 107.11 or 107.10 and 110.60, and the break above 110.60 last week opened a 350-point measured move upside extension towards this 114.10 area. But once we get up there, look for the market to once again stall out with a broader downtrend firmly intact, and the market coming up to some stiff resistance in that 114 to 115 area. Sterling dollar. So cable continues to show signs of wanting to continue with its correction out from those recent near 7-year lows at 140.80. Look for the market to now hold above 143.50 ahead of the next upside extension above recent highs at 146.68 and towards the 148 area further up. At this point, the broader downtrend does remain intact, so the market will be looking for a medium-term lower top, but again, in the interim, this correction looks like it wants to extend higher, and we shouldn't rule out the possibility of a move up towards the 148 area. Dollar yen. So it's all about the monthly chart in dollar yen right now, given the latest significant breakdown that we've seen below support in the 116 area earlier this week. The market has now collapsed all the way down to around 112, but is still showing signs of deeper setbacks. Again, it's important to take a look at this chart in the context of the monthly, seeing this latest breakdown as potentially exposing a move that could extend all the way back to some previous resistance, really the next resistance in the form of support, that previous resistance turned support down at 105.45. Again, the market is still trading within a broader uptrend, so we could see a higher low somewhere ahead of 105.45 and maybe towards the 110 area, but it is important to highlight this monthly chart and the possibility that we still do head back down to that level. Euro Swiss. So Euro Swiss has seen some impressive pullbacks over the past several sessions after the market posted a fresh multi-month high all the way up at 112. Again, given the broader structure here and the break above 110.50 several days back, the market is in recovery mode and a higher low is favored ahead of the next major upside extension beyond 112 and towards 114 further up. Really, it would take a break back below 107.15, which is a ways away, to negate the broader recovery structure in this market. Aussie dollar. So Aussie continues to chop around, but overall with the market locked in a broader downtrend, any rallies should continue to be very well capped, and rallies have recently stalled out ahead of 72.65, a key 78.6 fib retracement. Look for the market to eventually roll back below recent lows that we saw, which came in around 69.70, and towards the recent multi-year low at 68.27 further down. Dollar CAD. So dollar CAD continues to trade within a very well-defined uptrend, but the market has been in the throes of a correction over the past several days since trading to near 13-year highs at 146.90. Although we've seen a bit of a bounce in recent sessions out from that recent yearly low, don't rule out the possibility for another round of weakness that takes us back down to this rising trend line support, this longer-term rising trend line support, before the market considers the next major upside extension and a significant higher low. Kiwi dollar. So Kiwi continues to chop around, but again here, just like with Aussie, the market remains confined to a broader downtrend and should continue to be very well capped into rallies. Look for an eventual break back below recent support, which comes in around 65.60, to open the door for an acceleration of declines back towards next critical support in the form of that low from the 20th of January at 63.47. SPX 500. So the S&P 500 continues to show signs of a major top over the past several months, and the market remains pressured to the downside. Rallies have recently stalled out well shy of that recent previous support now turning resistance at 1993, and the market looks like it wants to put in a lower top by that recent high around 1947 in favor of the next downside extension to be confirmed on a break below 1811 and exposing a move down towards 1700 further down. If we do see another rally, though, the market should be well capped, continue to be well capped below 1993, and only back above this level would compromise the bearish outlook. Gold. So gold has been a major outperformer over the past several days, with the market surging through critical resistance at 1192, further confirming a meaningful base in place by that that late 2015 multi-year low at 1046. From here, initial resistance comes in the 1230 area, although the focus now is on a move back towards that high at 1307, going all the way back to January of 2015.